Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, April 28th, 2016. Take a look at the markets, guys. We're at a key level attempting to break down. This rollover late in the day came on the back of Carl Icahn announcing on CNBC that he sold his entire Apple stake. That's a big deal because Apple is the biggest company in the world, and therefore when it sells off, it has a big impact on the market. Plus, you have to think that Icahn is looked at somewhat of an investing guru, right? I mean, he's a big hedge fund player, right? And he has a control of Icahn Enterprises and makes decisions on buying and selling stocks. So if he's making this decision, other investors and other pros are going to follow him. And what we can see here is if we go to Apple's chart, as soon as that announcement was made, Apple took a dump right here to the downside. And you can see Apple right now actually has taken out the lows from yesterday on the back of its earnings, and that is very bearish. If it closes below this low, $90 is a very real potential level to hit. Now, going back to the spiders on a technical level, just take a look at how the beauty of this chart. We opened into this trend line here. Look at this upsloping trend line, how awesome this is. This pivot low to this pivot low, and then on the Fed decision, you got this low pivot before it raced higher yesterday. Then today we opened right at that level, surged up, went right to yesterday's high. Notice we didn't take out the high from Fed Day. That is very important on a technical basis. We then rolled over and started to sell sharply on the back of this news, and look at where we are. So there are a couple levels I want you guys to watch into the afternoon session. Right now, this is a nice little afternoon sell-off, but I don't think we can go out on a limb yet and call a market correction or pullback of epic proportions. Yeah, sure, it's a little bit of a drop, but every drop has been a buying opportunity in recent months. I mean, from February's low, the market's up 15%. I mean, that's a huge move in just a couple months. So what are we going to look for to change our view to a sharper down move? The answer is very simple. This trend line here, if you close below it, that's step one. But really what I'm looking at is the low from Fed Day. The reason why you pay attention to this low right here, which matches the low from today's action as well, all right, the reason why you're following this low and this low, and this is the one I'm really following, is because the Fed decision, right? So think about this, a big event. The Federal Reserve has controlled this market up and down. Some people would say, oh, it's earnings. No, it's not, because earnings have sucked and the market still went up. Some people have said it's economic data. No, that's not true, because the markets have gone up and economic data has been stale. Look at GDP numbers this morning, 0.5% growth. That's it. China's been a mess. Europe's been a mess. So obviously it's not that stuff. So it's the Federal Reserve has been controlling it. So the low pivot from Fed Day and the high pivot, that's your range. That's your controlling, powerful range led by the powerful, most powerful entity in the world, the Federal Reserve. If we take out this low or this high, that's your major bias one way or the other. Notice how this morning we actually didn't even pierce this high. I take that as significant for me. All right, now look at as we're coming down. Look at the sell-off here, folks. If we can take out this low, especially a close below this low, I think you can see as early as tomorrow, maybe today, but as early as tomorrow, you could see 207.50 very quickly hit double bottom here from late last week. Actually, earlier this week. Okay? If we take that out, and look at this, guys. This is actually a pretty powerful trend line as well. You could even make a case you have an upsloping there. But actually, you have, whoa, look at this. Nice head and shoulder formation. Look at that. Shoulder, head, shoulder. Where's your neckline? Take your neckline right here. This is your next big pivot. All right. If you, check this out. Let me calculate this out for you guys. All right. So here's your neckline. You went as high right here as 211. And a drop straight down brings us to 207, we'll call it, so a $4 drop. So if you break this low pivot here, and by the way, we're testing that Fed low from yesterday. If you break this, you have a $4 fall from 208 to 204. So you'll go back to 204 if that headline neckline of the Head and Shoulders breaks. All right, so watch this. So here's Fed. Look at this. We're getting a little bounce off this. This is the low from Fed. This is very important. This is the low of the day as well, double bottom. If we take this out, this level, this one I don't even care about that much anymore. It's all about the neckline of that Head and Shoulders. Watch that like a hawk, folks. This is big stuff right here. This is freaking big stuff. Pay attention. Talk to you guys soon.